Global markets tumble as the UK votes to leave the EU. And Standard & Poor's says a downgrade of Britain's AAA credit rating imminent after a vote in favor of leaving the European Union. Plus, South Africa's rand slumps more than 8% against the dollar after Britain voted to leave the European Union. Hello and welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. Well, a downgrade of Britain's AAA credit rating by Standard & Poor's could come quickly after a vote in favor of leaving the European Union. And that's according to S&P Chief Sovereign Ratings Officer Moritz Kremer. Mr. Kremer said in April that a leave vote would likely lead to a downgrade of Britain's rating, given the country's deep political, financial and trading ties in Europe. And the value of the pound has fallen dramatically as it emerged that the UK had voted to leave the EU. At one stage, it hit $1.33, a fall of more than 10% and a low not seen since 1985. Now, before the results started to come in, the pound had risen as high as $1.50 as traders bet on a Remain victory. But following early strong Leave votes in northeast England, it tumbled to $1.43 and then took another dive as Leave maintained its lead. The move in sterling is the biggest one-day fall ever seen. Meanwhile, the London stock market plunged in the wake of the UK's referendum vote to leave the EU. In the opening minutes of trade, the FTSE 100 index fell more than 8% before regaining some ground by mid-morning. Our banks were hard hit, with Barclays and RBS falling about 30%, although they later pared losses to about 17%. Now let's cross over to Frankfurt to see how the market over there is faring. DWTV Channels TV financial correspondent Olaf Krieger joins me now. Good afternoon, Olaf. Well, finally, UK is out of EU. Before now, you were sure they will remain. I'm sure you are very disappointed today. So tell me, how is the market where you are standing bracing up to this new reality? What's happening to the European stocks?
Well, Jimmy, I have to say we see so many traders and investors still restless here at the Frankfurt stock market because it starts with a big bang, with something like an earthquake from the beginning on. German top shares are going south. Our losses were heavily around 10%. Now there is something like a slightly recovering at the shares, but nevertheless, this was really a hard ride here in Frankfurt. A massive disappointment because many investors and traders thought, well, maybe it's going okay with the UK, but then came this news out that the UK is leaving the European Union. It was really a hard blow, and this thing will continue, I'm pretty much convinced, probably next week. And the question is, what is the impact if the UK is out of the European Union, and is there probably a kind of a domino effect because there are so many criticisms in Europe, and maybe we see something like a Brexit or whatever. So the heat is on, that much is for sure.
Now, we also saw the pound sterling plunge to its lowest level since 1985. How's the euro doing now?
Well, the single currency is also nosediving this morning, not that much than the pound, but almost 2% down at the moment. Investors, even at the currency markets, flee to safety. And so, well, I think it's not the huge problem for the euro, for the single currency, but for the pound, the situation is really dramatic. And by the way, even the oil price took a hit after the decision that the UK is leaving the European Union. So overall, no matter on the commodity markets, on the currency markets, and of course on the equity market, this was really something like a Black Friday.
Well, I'm sure it's not just the EU and the UK that will probably be feeling the impact of this vote. Now, let's look at the frontier market. What are the expected impact there?
Well, I think they will still stick together, the Frankfurt and the London Stock Exchange, as they pointed out, and they're trying to create one of the biggest equity markets in the world, and no matter whether the UK is not any longer a part of Europe, and we have to keep in mind that this will be really one of the biggest markets ever, a big shot in the financial world. So, and that's what we here in Frankfurt is, well, let's do it, and the merger talks will be continued, and that much is for sure. But I won't leave you with some encouraging words, because the CEO of Airbus, Thomas Enders, pointed out this is not the end of the world, and Europe will survive this.
Well, Olaf, I guess you were talking about the merger plan between the LSE and Deutsche Börse. Well, I wanted to know what will happen to Frontier Market now that the UK has decided to leave the EU?
Okay, I'm sorry to did not address that question. Well, if the pound is going down, it's always a good thing for let's say German investors and German companies, because or even for British companies, because their products on the world markets, most of them are US dollar markets, are more competitive. It might help in this particular special situation the UK is going into, and yeah, well, it might help a bit if the pound is down, but overall it's also a bad sign if an economy that large like the UK have such a weak economy that the British pound sterling is right now.
Well, thank you very much for your time, Olaf. Let's just get to see and wait how this whole thing would eventually play out. Thank you for your time and enjoy the rest of the weekend. I was Olaf Krieger, DWTV Channels TV Financial correspondent, reporting there from Frankfurt Stock Exchange. Now in Asia, markets tumbled as UK vote to leave the European Union. In Japan, the Nikkei 225 tumbled 7.92% on the back of fresh strength in the yen. Japan's Nikkei futures were briefly halted from trading for the first time since May 23, 2013. Now, across the Korean Strait, the Kospi lost 61.47 points. Australia's ASX 200 dropped 176.48 points as stocks with exposure to the UK tumbled. Chinese mainland markets were lower, with the Shanghai Composite down 0.95% and the Shenzhen Composite down 0.10%. In Hong Kong, the Hang Seng Index was down 4.43%. Meanwhile, Japanese Finance Minister Taro Aso says he would firmly respond to the currency market movements if necessary to prevent extremely nervous moves from continuing, while closely watching movements with a sense of urgency. Japan's policymakers are worried a Brexit vote could boost demand for the safe haven yen and trigger an unwelcome rise in the Japanese currency that would hurt Japan's exports.
The stability of the foreign exchange market is of utmost importance for global growth, but currently the foreign exchange markets are extremely nervous. In order for that not to continue on too long, we are monitoring very carefully the market, and if need be, we'll take action. There are a lot of scenarios ahead, but just because they voted out doesn't mean there will be immediate changes, at least not in the near term. As far as the foreign exchange market is concerned, we're keeping a close eye on it.
Now, what are the economic implications of the UK's decision to leave the EU? That will be our focus after the break. To stay with us.